An African free trade zone has come into force, creating the world's biggest single market by population. 22 out of 52 nations that have signed up to the Continental Free Trade Agreement have ratified the text. But many issues still have to be negotiated, and there is a notable absence. Let's get more now with Maximiliano Mendez-Parra in London. He's a senior research fellow at the Overseas Development Institute. Welcome to Money Talks, Maximiliano. Now, looking at the figures, inter-country trade in Africa is among the weakest among the world's regional trading blocs. Do you believe that this new free trade zone will succeed in boosting trade on the continent?
Well, the CFTA is very important from the political point of view because it puts all the African countries behind a common objective, that is to transform their economies. In the short run, as a tool, the CFTA will probably struggle to deliver a lot in terms of trade because it managed to address most of the tariff and non-tariff barriers that exist on the trade within the continent, but it will fail in the short term to actually address what is the most binding constraint, that is basically the physical barriers and the lack of infrastructure that exists in the continent. So clearly, even in the services aspect, where actually you can overcome those physical barriers, actually the agreement is not very ambitious. In terms of the second phase of the negotiations that are going to start in July, there are clearly an opportunity of creating a common investment space in the continent that will facilitate investment within the continent. But the bottom line is that in the short run, the agreement, it is unlikely to change substantially the picture in terms of trade flows within the continent.
Interesting. Okay, so you mentioned the lack of infrastructure among the nations as one of the obstacles to this free trade zone succeeding. Is there an undertaking as part of the deal that countries will look to boost their infrastructure?
Well, clearly they need investment, clearly desperate investment, not only in infrastructure, but also in productive infrastructure. The agreement, as long as it's a sort of a chicken and egg story, as long as it does not deal with the infrastructure, the agreement will not have effect. But actually, the agreement could potentially generate some synergies to bring that investment that will facilitate the delivery of the results of the agreement. So the message is that probably in the short run, nothing is going to change substantially, but the agreement constitutes an opportunity for further work to be taken to generate those necessary investments.
And as we know, Africa's strongest and biggest economy, Nigeria, has so far refused to sign up to the free trade zone. Tell us why they're holding out and what impact will that have on the success of this zone?
Well, clearly in the specific case of Nigeria, the country is the largest domestic market, that is going to be one of the largest markets in the world, domestic markets in the world. So clearly what their business community considers is that actually there's very little because of these barriers that still exist, that they can gain from the agreement, that there is more that they could lose in terms of increased competition from countries such as, for example, South Africa, that could eventually compete in the market. So there is a very strong internal opposition from the business community against the agreement that in principle is not necessarily shared by the government, but clearly the government has to play also in some sense what is the political economy of the agreement.
Okay, now a lot of people are saying that the creation of this free trade zone is something to cheer in the wake of the trade wars we're seeing around the world, Britain looking to get out of the Eurozone and the EU. Do you share the same positive outlook on this development in Africa?
I think it is a positive development. I think that it's also possible to be overly optimistic about what it can deliver. And there is also a risk that the agreement may be an end and not necessarily a tool to achieving something. Clearly, Africa needs to trade more, not only within Africa, but we need to trade more with every country in the world. And we need investment not only from Africa, but investment from every other country. So there is a risk that in a context of hostility towards trade, I mean, trade wars, etc., of that Africa may eventually close further than it is, which would be bad for Africa, and it will repeat a very bad experience that happened not only in Africa, but for example in Latin America during the 60s and the 70s.
Okay, Maximiliano Mendez-Parra, we'll have to leave it there, but thanks so much for your insights.